AMD and NVIDIA have announced their latest tech for 2025, leaving some people excited and others disappointed. You've probably seen lots of videos on NVIDIA and AMD stocks with experts hyping things up and gurus claiming they found the next big thing. But if we move away from the hype, which stock is right for your investment portfolio and fits your unique risk tolerance and financial goals? I'm Kiana, the Invest Diva, former electrical engineer, here to help you take control of your financial future and accelerate your freedom without relying on shady money managers and Wall Street bros. Many Wall Street bros started dumping the AMD stock, causing it to drop 48% from its peak in 2024, while NVIDIA continues strong despite minor and temporary pullbacks. The questions I'm getting the most from our premium investors are, should I buy NVIDIA stock now or wait? Should I sell my AMD stocks? Is there any alternative AI-related stock that is undervalued and a good buy? In the This or That series, I show you how to choose the right asset for your portfolio based on your unique risk tolerance and the timeline to hit your financial goals. I create my investment strategies based on the 5 points of the Invest Diva Diamond Analysis, or the IDDA. This has helped me stay calm and collected in the past decade as I grew my portfolio from $500 monthly contributions to over $5 million in one of my stock portfolios alone. The Invest Diva Diamond Analysis includes capital analysis, which is your risk tolerance, intentional analysis, which is your unique financial goals and timelines based on your age, health, and lifestyle, fundamental analysis, which focuses on the viability of the asset you're looking into invest in the time frame you're looking to hold it, sentimental analysis, which focuses on the current emotions of Wall Street bros and other market participants, and lastly, technical analysis, which uses history to identify the key psychological levels the stock price could reach in your preferred time frame. This way, you get to decide exactly which of these stocks, if any, suit your risk tolerance, and if so, what stock price you should target that helps you invest with a peace of mind without fearing you missed out or bought at a way too expensive price. Would that be helpful? Toward the end of this video, I will also share my thoughts on another AI stock many of you have been asking me about. I'll show you which stocks I'm planning to invest in 2025, my exact asset allocation, and the price targets I'm looking to buy and sell. So make sure you watch until the very end. First things first, transparency is important. Here are the largest current allocations in my portfolio and their performance in the past year. And here is my 6-year-old daughter's current asset allocation in her Roth IRA for minors, so you can decide if it's worth watching the rest of this video. I also have the timestamps for everything I'm covering today, so you can jump to them if you wish. But let me point out a few things before you do. First, I'm not a financial advisor. My background is in electrical engineering, and I got my degree from the Tokyo University of Electrocommunications in Japan. My full-time job is not stock market trading. I mainly invest medium to long term, meaning anywhere between 1 to 10 years, and I only spend 1 hour per month managing my portfolio. So if you're looking for day trading or scalping ideas, this video is not right for you. Second, I did not become a millionaire just by investing in best performing stocks. I accelerated my portfolio with triple compounding. It's a process almost all self-made millionaires like Dave Ramsey, Grant Cardone, Oprah Winfrey, and even Warren Buffett use, but don't publicly talk about. You can learn more about triple compounding at triplecompounding.com. After leaving Wall Street in 2012, I decided to share what Wall Street bros don't want you to know. And since then, I've written 7 books, including a Wall Street Journal and USA Today bestseller, as well as the international bestseller, Cryptocurrency Investing for Dummies. I'm now writing my 8th book, Triple Compounding for Dummies. Third, investing in any asset involves the risk of loss, and asset picking is not a one-size-fits-all. You should only invest based on your unique ability and willingness to take a risk. In fact, 96% of traders lose all their money in the markets because they jump in without measuring their exact risk tolerance. You can get a free risk management toolkit to calculate your risk tolerance by attending the triple compounding training at triplecompounding.com. All right, now that we have all of that out of the way, let's dive into NVIDIA versus AMD stock risk assessment. Fundamental analysis first. NVIDIA became one of the world's most valuable companies thanks to the AI gold rush and being at the right place at the right time with the right technology, or GPUs. We're just scratching the surface of the AI explosion. So naturally, most investors continue to be excited about the company that sells the graphics processing units and the software crucial to training and running AI algorithms. In 2024, Bloomberg News called NVIDIA's chips the workhorse for training AI models, and Moody's senior vice president Raj Joshi said NVIDIA represents the dominant infrastructure player behind the current rise of the AI sector. So clearly, NVIDIA is in a dominant position. But the question in everyone's mind is, will it last? I've been strategically investing in both NVIDIA and AMD since 2016, long before they were cool. In fact, AMD stock was at an all-time low of $1. And I remember getting laughed at when I talked about my investment decision at a Benzinga interview that year. 9 years in, and who's laughing now? For me, patience in the market has always been a profitable virtue. But I don't just sit around and ignore the stocks I invest in. So now, as I'm planning my strategic moves for the next 3 years, I'm looking at things that get buried in the media hype. For NVIDIA's fundamental risk, I'm looking at 3 things. First is the thing most Wall Street bros are overlooking, and that is the fact that NVIDIA doesn't fab its own chips. It is expected to be supply constrained moving forward, creating an opportunity for its competitors. What this means is that NVIDIA is still going to continue to be a profitable company, but it might not be able to grow as rapidly as it did the past couple of years, even though the demand for its chips will continue to be high. America is currently critically dependent on international chip fab facilities like TSMC and Samsung. The CHIPS Act is attempting to build chip fab capability in the US, but this will take time. With the incoming Trump administration, geopolitical tensions in the Pacific region could increase, and as a result, NVIDIA's reliance on TSMC and Samsung could impact its ability to meet future demands. This means Wall Street bros might start getting disappointed with NVIDIA's earnings results in the next 3 years. Second, I love getting ideas about the future of dominant, too big to fail companies by studying history, because if you paid attention at school, you probably noticed that history might not repeat itself, but it does rhyme. When people talk about this, typically Kodak and Blockbuster come to mind. But we don't have to go that far and could stay in the same tech category. If you look back in history, in the early 2000s, AMD had dominant chips. Its stock price was high. They were sponsoring Formula One. They were on top of the world. And then they got completely disrupted by Intel when Intel came out with better technology that AMD could not match. AMD could not compete. Its stock price went down to $1 per share and stayed there for 8 years, which is when we started investing in it thanks to a tip from my husband, Matt, who's also an engineer and a gamer. AMD finally started revamping their entire business. They brought in Lisa Su and hired the right people. The fundamental strength of the company is all about the talent who works in it. And they were able to develop Ryzen CPUs and really focus on bringing the company back to where it is today, above and beyond where it used to be at its peak in the early 2000s. What's fascinating is that Intel also got disrupted. Intel had amazing technology and its brand became a household name. Everyone knew there was Intel inside. Inside where? That was up for debate. But then they stopped investing. They got comfortable, kept milking the cow, stopped advancing their technology, and fired Pat from the CEO position in 2009. This is before he rejoined Intel in 2021, just to get fired again in 2024. Maybe that was the right decision, who knows? But they stopped investing in their technology, and that led to disruption from AMD, whose Ryzen CPUs are now clearly on top. This could also happen to NVIDIA. But the big difference with NVIDIA is that the CEO, Jensen Huang, is the founder of the company. And when you're the founder, you go above and beyond because it's your baby. So I don't think he's going to let that happen. But if anything happens to Jensen, or if he leaves, then there is a very high chance that history will repeat itself and it will happen all over again. Just look at Apple after Steve Jobs. The third thing to consider when it comes to NVIDIA's long-term fundamental viability is the risk of a technology shift. When there's a technology shift, which means that there is a fundamental change in technology, that also opens up the door for companies in dominant positions to get disrupted. For example, neuromorphics and quantum computing are progressing rapidly, with both offering significant performance improvements for AI. NVIDIA will likely buy companies in this space to stay competitive, but the advancement of these technologies will open up the door for future competitors. A company that might be on the radar is Cerebras, which builds systems for complex AI deep learning applications, but they don't have the positioning to fabricate their chips at scale, unlike many larger companies. As I mentioned before, fabrication is limited worldwide, worldwide and has already been locked down for years by companies like Apple, NVIDIA, AMD, and Intel. Intel doesn't have their new fabs up and running, and to build new fabs takes 3 to 5 years. What does this mean? That means the companies that are likely to disrupt NVIDIA are already established companies with future fabrication capacity locked down, such as AMD, Intel, and Apple. That is why I believe NVIDIA could see more of a challenge beyond the next 3 years. Remember, what I'm focusing on here is not whether NVIDIA would get replaced, but how big would the AI sector pie grow, and would NVIDIA's share of the pie go down? Based on everything I've mentioned, NVIDIA's share of the pie might shrink, but if the pie is growing, NVIDIA's share of the pie will still grow. But that also opens up the door for others like AMD and Intel to grow their share of the pie as well, especially if NVIDIA can't meet demand. It's evident that AI isn't going anywhere, so if the pie continues to grow rapidly and NVIDIA's share of the pie shrinks, it could create interesting investment opportunities for other companies that step in. That being said, there is no denying that NVIDIA has the brand name, leadership, and capital behind them to remain the dominant force in the AI industry and retain the largest piece of the growing AI pie, at least for the next 3 years. And with all of this considered, the risk of NVIDIA getting disrupted in the next 3 years is low. And no, there is no way to make a sensible prediction beyond 3 years because of the rapid pace of the technology change. So for now, from a fundamental point of view, I'm viewing NVIDIA's fundamental risk as low. But what about AMD? AMD is investing so much time, energy, and resources in AI that they're skipping high-end gaming GPUs for this new generation. This is disappointing for AMD fans in short term because it allows NVIDIA to price their new 1590 at whatever price they want, which is pretty high. But this also means that in the next 2 years, we'll likely see some highly competitive products from AMD. They decided to focus on AI because the profitability and margins are significantly higher than those of gaming, and therefore they're banking on capturing market share from NVIDIA. However, the opportunity for AMD to capture a bigger market share clearly depends on the quality of its future products. For that, I view AMD's fundamental risk as medium. Remember, the higher the risk, the higher the potential reward. But if the riskiness of the asset doesn't match your risk tolerance, you could lose your shirt and portfolio. 2 more analysis points of the diamond to go. And if this has been helpful so far, hit that subscribe button and give this video a like. It'll help me know this is the type of content you want me to create. And you will help us fulfill our mission of helping 1 million families take control of their financial future and accelerate their financial freedom. The next point of the Investiva diamond analysis is sentimental analysis. For this, I'll look at what Wall Street bros and other investors feel about this asset. Yes, this is all about your feelings. If you've attended my triple compounding training, you've watched me prove that the markets have nothing to do with math and move simply based on Wall Street bros' emotions. For NVIDIA, at the time of filming, Seeking Alpha shows Wall Street is extremely bullish, meaning they feel like buying tons and tons of NVIDIA stocks at any price possible. Meanwhile, other analysts and quants are simply holding on to what they have, feeling kind of meh. To confirm, I like to look at the Relative Strength Index, or RSI. This is a momentum indicator that measures the magnitude of recent price changes to analyze overbought or oversold conditions. If the RSI goes above 70, it indicates the stock is overbought. In NVIDIA's case, at the time of filming, NVIDIA is not overbought, but it is getting there. Based on these, I view NVIDIA's market sentiment risk as medium. For AMD, Seeking Alpha is showing both Wall Street bros and analysts are buying, but they're not as enthusiastic about AMD as they are about NVIDIA. Meanwhile, quants are holding. They are kind of meh. The RSI for AMD stock is right in the middle, confirming people's mild attitude towards AMD. So all in all, the market sentiment risk for AMD stock is also medium. Before we get to technical analysis, I'm curious, what is your sentiment towards these stocks so far? Do you feel like buying them, holding them, or selling them? Share your sentiment in the comments because with your help, we can gauge the market sentiment even more. Arigatou gozaimasu. The final point of the IDDA is technical analysis, and after that, we get to make an overall decision about which stock is right for you and at what price. NVIDIA is up first, and at the time of filming, it has just reached an all-time high level and then pulled right back down. Looking at NVIDIA's past, you notice that over the years, after seeing a 200 to 400% gain in a new uptrend, it typically sees a 40 to 60% pullback. In the most recent trend, we're only 211% up. So in my opinion, we could see NVIDIA stock reach one of these Fibonacci retracement levels and then potentially pull back toward the key support levels shown here. And for that reason, I view NVIDIA's medium-term technical risk as medium. As for AMD, at the time of filming, it has just bounced up off this super strong and key support level of 121, which happens to also fall on the 61% Fibonacci retracement level. Fibonacci is one of my most favorite technical analysis tools. It works just like magic. That is, of course, before my second favorite, Mr. Ichimoku. On the daily chart, the Ichimoku cloud acts as a resistance barrier. In the past, AMD has seen anywhere between 26 to 65% drop after reaching a new high. In the most recent crash, it has already dropped 48%. Considering their short-term fundamentals, I wouldn't put dropping lower to the next support level of 92 off the table. Although chances are a bit low because the 121 level has been tested multiple times in the past 3 years, making it a super strong psychological level. By the way, if this is sounding a bit too complicated for you, you should join me at my next triple compounding live virtual event where I hold you by the hand and show you exactly how to become your own money manager and not just rely on basic compounding, but level up to triple compounding like all other self-made millionaires and billionaires. You can save your spot to get on the waiting list for the next event at triplecompoundinglive.com. And now comes the moment of truth. NVIDIA or AMD, which stock matches your risk tolerance? Based on the fundamental, sentimental, and technical points of the IDDA, NVIDIA's overall risk is medium. And AMD's overall risk is medium low. So if you like your steak medium rare, if your risk tolerance is medium low, then AMD might be the better choice for you. Of course, at the end of the day, the most important thing to consider is your own confidence in these assets. So I'm curious, does either of these stocks match your risk tolerance? If so, at what price are you planning to buy? Let me know in the comments. Arigato. Before we get to the mystery AI stock I wanted to talk about today, you might now be wondering what my strategy is for NVIDIA and AMD stocks. Personally, my willingness to take a risk dropped to super low the moment I gave birth to my daughter. If you're a parent, you can probably relate to this. But being the ultra mega multi-millionaire that I am, my ability to take a risk is obviously high. That puts my overall risk tolerance at medium. I believe NVIDIA is going to grow with the AI pie, and if I didn't already have almost 4,000 NVIDIA shares, I would buy some at the current market price. But since I do already have so many shares, I'm setting some buy limit orders to buy more at potential pullback levels of $129, $117, and $97. This way, I can bring my cost basis down, but I won't get super mad if the stock price doesn't drop that low. AMD has been my other tech love in the past decade, but I sold a bunch of it last year. So my exposure to AMD is significantly lower than that of NVIDIA. For that reason, I have buy limit orders set up to buy more at $121 and $93 if the prices drop to that level. But please do not take my strategy as your own. Personal finance is personal. If you've watched my previous videos, you know you should never set a buy limit order or sell limit order without asking yourself what I call the confidence compass questions. You promise? Yes? Then you deserve to stay for a bonus segment in today's episode about this other AI-related company that is getting lots of heat right now. And many of you have been asking me if I'm still invested in them. Yes, I'm talking about Intel, the problematic black sheep of the family who also happens to be too strategically important for the US to fail. In 2024, I started to focus my portfolio on Intel to diversify away from NVIDIA's lack of ability to fabricate their own chips and their risk of becoming supply constrained. On top of that, in November, right before Intel CEO Pat was let go, the US government awarded Intel $7 billion in direct funding through the US CHIPS and Science Act. But once Pat left the company, it caused the Intel stock price to wipe out all of the gains it had made in the beginning of 2024 and drop right back to the key psychological level of $19. So the question now becomes, what is next for Intel? Are its problems really worse than you've heard? Is there any way it can get itself out of this chaos? Many Wall Street bros complain that Intel's problem is that they try to do too many things without a single focus. It is getting hot in here. They would compare Intel to GE or United Technology, which got away from their core business, tried to expand into way too many sectors, and failed as a result. Being a savvy entrepreneur and marketer, I'm the first one to point out the value of focus. I preach it to my $1 million family accelerators all the time. However, when I look at Intel, I don't see a lack of focus. They are still very much focused on their core business of tech and semiconductors. Yes, unlike NVIDIA, they don't source out their fabrications, but to me, this is more about being self-sufficient while focusing on their core business. What I do recognize as Intel's big problem is talent and vision. After Pat left, Intel went back to having 2 interim co-CEOs, which in my opinion is the recipe for disaster. Talk about having too many cooks spoiling the broth. The good news is that this is temporary until they find a permanent CEO. The bad news is we have no idea who that will be. Based on this, I view Intel's current fundamental risk as high. Now, Warren Buffett did say buy when they're fearful and sell when they're greedy. And the truth is, the sentimental risk for Intel is currently super low because everybody's trashing them. On the technicals, Intel is back to the key support levels here. And if I didn't have any Intel and trusted they're going to figure out their talent problem, I would mark the $19 price as a medium risk entry point and anything below $13 as low risk. But I'm not going to try to speculate what will happen with them though. And since I do have over 4,000 Intel shares, I'm not buying more at the current cheap prices. I am holding on to my Intel stocks and will decide on whether I'd like to buy more after we have a clearer idea of the company's talent future. I hope I exceeded your expectations with this video in the This or That Stock series. Thank you so much for watching. And remember, personal finance is personal and there is no one-size-fits-all investment strategy. My goal is to help you take control of your financial future and accelerate the financial freedom you deserve without relying on shady money managers, even if you're super busy and even if you're not a math whiz. And we do that with triple compounding. Let's go! Woo!